Kadena, or the KDA token, is a prime example of how crypto has evolved over the years. In the early days, small retail was incredibly excited about all kinds of altcoins, including Kadena. Now the interest tends to go down, the prices are down as well. Is this potentially an opportunity? Let's have a look at the data most people are not considering. Just have a look at this statistic. This was my very first video on Kadena, published a long time ago, 1,344 days ago. That's more than 3.5 years. And that video just slightly outperformed the average video at the time, right? The average video is this gray area here, yet it got more than 500 subscribers. I then made a follow-up video 2 years ago that outperformed the average video by quite a bit, but it only gave 43 subscribers. So clearly, the number of investors that get into the ecosystem has come down massively. Just have a look at how often the term altcoins had been searched in the past. This is a 5-year chart, and we can clearly see altcoin seasons. So a massive peak in May of 2021, another one in October of 2021, then again in March of last year, and in December of last year. And currently, the attention on the sector is very low. And we want to buy when nobody is interested, right? And we want to sell when everybody gets hyped about an asset, or in this case, an entire asset class. The Kadena price, unfortunately, did not see multiple peaks. We had one massive run-up with the subsequent dump. The peak was at above $20. Now we are at 38 cents. Can we recover at some point? Will the blockchain for business get so much adoption that the KDA price can go up as well? We're going to look at the usage statistics and the on-chain metrics in a second. But first of all, I want to share something. Have a look at how the Kadena marketing has changed over time. This here is Wayback Machine, and this is the Kadena website from 2016. So that's now almost 10 years ago. The focus was on high performance, on smart contracts, on being a distributed ledger, very much technical, unique selling points. The website didn't change that much the following year, but the focus already started to move towards business logic that's confidential. The design got an update and the business focus got more clear, but the ecosystem did struggle with adoption. And so the marketing was shifted towards targeting developers to create new applications on the platform. Things became a bit more generic. Kadena driving the next round of business and social transformation. Subsequently, developers got even put into the center of the website. It's not business anymore. It's about scalability and digital value. That's now in 2021. And so it continued in 2022, empowering builders for innovation. And so it continued that way. But as we've seen at the beginning of the video, we are now coming back again to business. So what has changed really? It seems like the Kadena team is now focusing more again on marketing and not necessarily on building on the platform. Because have a look at how much capital is on the Kadena blockchain. We used to peak at around 10 million and then came crashing down. Now this is measured in US dollars, and of course the price impact of Kadena does play a role as well. So if we measure the total value locked in KDA tokens, we are getting this chart. Unfortunately, also not necessarily long-term growth, but at least in the last years, we didn't see that shrink either. But clearly, the promotion towards developers to get new applications built on the platform for mass adoption has failed to a degree. Now it's all about marketing to businesses again. But then, why did the price pump and subsequently dump that massively? I think the answer can be found in the tokenomics, the circulating KDA tokens over time. Kadena is an inflating token. There's more tokens hitting the market that mainly go to the miners, and that's constant sell pressure on the price. Within 6 years, the number of circulating KDA moved from less than 1 million to currently 326 million. It needs a lot of demand to keep the price stable at such an inflation rate. And it's not like the project is super decentralized that would help with mass adoption. This comes from the official KDA Stats.io website. 12 wallets hold in total almost 70% of the supply. The top 100 tokens hold 90% of the supply, more than that. Actually, when we try to find statistics about the usage of the blockchain itself, it really doesn't look great. Let me show you a very problematic statistic. Now, I'm not sure if this is just a tracking error or if that's really what's going on. In the last 24 hours, we saw 0 active addresses apparently. There are 11,917 unique addresses, but none of them were active in the last 24 hours. I can't really believe this. But again, this comes from KDA stats.io. If you know a website with long-term usage statistics of the platform, then please share that link down below. Please share below what kind of name that website has, and then we can discuss this in the next video. Right now, it appears that the bulk of the price discovery happens with short-term leverage on the price. Market makers that push the price around. In general, activity is extremely low. So on the spot market in the last 24 hours, we saw only $730,000 that moved hands. That's incredibly low. Now on the perpetual futures, we've got slightly more trading volume. There's 5.6 million among the top 2 exchanges. Still, extremely low liquidity. Most traders on the perpetual futures are betting on rising prices. That's why we've got a positive funding rate. But really, whatever price rally we see in KDA is just short-term leverage by the traders. Just have a look at how the open interest, so the amount of bets on the price, correlates with the spot price itself. When there's many people that push up the asset via the perps, we do see a price pump as well. And then that deflates, of course, at one point. This chart, of course, cannot give us that much information, but this chart can. This is KDA relative to Ethereum over the long term. And we always want to look at relative valuations, right? That's in the end why we get into altcoins in the first place. By buying altcoins, we take on more risk compared to just getting into Bitcoin and Ethereum, and that additional risk has to get compensated. In the past, of course, that was not the case because of the massive token inflation. But we did see our short-term rallies. Again, those were triggered through short-term leverage on the perpetual futures. And maybe, just maybe, we can see another short squeeze at some point. Now, currently, nobody is betting on falling prices. And so there's no great incentive to push up Kadena specifically. But given its current market cap of around 100 million, and given that it's at very similar price levels relative to Ethereum compared to 1 year ago, there might be a chance we see another rally. That rally could see Kadena outperform Ethereum by 140%. Whatever rally we see is very, very likely going to see a price deflation at some point. So I'm currently not touching Kadena, but I keep monitoring it. If we see a sudden rally again that has similar magnitudes to what we've seen in the past, then I will enter a short position. Then I do think we will see a deflation of open interest again, and that's the opportunity at that point. Shorting Kadena now is a bad idea. Buying Kadena could be a potential opportunity, but be prepared to see negative returns most days because the rallies come very fast, it's short-term manipulation, and then it's all about exiting on time. Or potentially just waiting for the rally and then short the asset. That's what I'm personally doing with KDA. Really, in this current situation, I think it's better to work with the general market structure instead of trying to find the needle in the haystack. Yes, there are a few altcoins that made profit in the last year. This is the smaller altcoins, the performance in the last year. There are a few green bubbles over here, but chances are, especially when you've got a diversified portfolio, that you are down. Because crypto is highly correlated, so assets do tend to move in the same direction at the same time. But there is long-term underperformance of the altcoins. What we've got over here in green is Ethereum, and in white we've got the altcoin. Both lines go up and down at the same time, but the white line tends to do worse long term. And there's a good reason for this massive underperformance of most tokens. And that's over here. It's shown on Tokenomics.ai. That's a website that tracks various altcoins. And just have a look at this. WorldCoin and Trump sees a lot of unlocks tomorrow. 5 million worth of unlocks. Solana has 10 million, but Solana is overall much larger in market cap anyways, so it doesn't matter too much. But WorldCoin and Trump doesn't have as much usage. And so, surprise, surprise, WorldCoin relative to Ethereum long-term tends to go down. And Trump relative to Solana doesn't look that different. When the early investors and the insiders and the team is getting more and more tokens over time, and the project itself isn't growing that much anymore, we see constant underperformance. But it's really about the relative valuation, right? It's relative to Ethereum or relative to Solana. It's not just in US dollars, because sometimes when there's a rally, the altcoins go up as well. It's just the ratio of the small altcoin relative to the larger market-leading cryptocurrency that goes down over time. And so there's a way to make money with this. We bet on falling prices of all of those crap coins, while at the same time we bet on rising prices of Bitcoin, Ethereum, and Solana. So we're winning on one end, we're losing on another end. We're just playing the delta, and we can make money by basically turning this chart around. Everything that's red here can turn into green. Everything that's green can turn into red. And then all of a sudden, we've got the odds in our favor. We're not trying anymore to pick the needle in the haystack. We're just betting on the haystack continuing to do what it's always doing. And so have a look at how our community is making money with this. If you've got proper stop losses in place, if your risk management is on point, individual trades can make massive returns. And so that's why I tell everybody that considers following this strategy to first watch the very first tutorial video here. Risk management with relative valuation bets. It's 28 minutes. Once you've watched that, potentially also with this video over here, you should be good to go. There are tutorial videos on all kinds of topics, but again, even though it's not a sexy topic, risk management does matter. Because even though the odds are in our favor with this strategy, you don't want to lose your shirt just because you've got one losing trade. Just because 1 out of 10 trades fails doesn't mean that you can use unlimited leverage without stop loss, because then this single trade that goes wrong will crush the entire portfolio. Risk management is super, super important. So feel free to learn more. It's currently $125 US per month. You will lock in that rate. So when I increase the price in the future, you will not be affected by that. Only new signups will be affected by higher prices. A link to premium will pop up over here. Just click on that. It will lead you directly to the website. If it's the very first time here, feel free to subscribe. I publish this regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube, or see you in premium. Cheers.